Okay, once again, sorry about the lateness. It was quite hectic today. So let's proceed with today's lecture. Sorry about my voice. I just had to take something chill, so it kind of affects my voice. So that's why. Sorry about that. But with that, I will still try to put my own energy. So let's start. Today we are diving into what we call technical analysis, right? So far, we have treated a lot of fundamental aspects. Is this in recording? We have treated a lot of fundamental aspects. Are you with me? We have treated a lot of fundamental aspects. This is what we call technical. We've talked about economic data, interest rates, and the likes of unemployment rate that could affect the forex market and how investors affect the crypto market. Are you with me now? I will talk about synthetic. And I told you that synthetic relies solely on what? On technical. Now, the entry into technical is actually candlestick, which you guys have already started. You guys conversing between yourself in the group. This is Twizzler blood. This one is Ama. This one is engulfing. It's actually good. There will actually be arguments that no, this is wrong. This one is actually a way for you guys to learn. So me, I'm not even saying anything wrong there. It's actually good for you guys to argue it. No, this one is this one. One way or the other, and the newbies will be able to grab that. Okay, this is what is happening now. When it comes to market structure. In this class, we are going to understand what market structure means and how change of character works. Okay. Now, what is market structure? What is market structure? Market structure refers to the way price moves in a trend, forming highs and lows. And the way I always define it for all students, which I put in the second bullet, is it can be referred to as a behavior of the market. It can be referred to as a behavior of the market, which means whatever strategy you learn, whatever entry model you learn, whatever things you might understand, and if you don't understand market structure, trust me, some things will fail. It's not a course. You get a lot of things we even fail, not some things. A lot of things we fail. So when we are talking about market structure, it means how the markets behave. If you don't understand the way confidence you are writing on my screen, if you don't understand how markets behave, what is the current behavior of the market, how will you be able to approach the market? What will prompt you to tell you that this is the next decision for you to take? Let me clean this too. The next what? The next decision to take. Are you with me now? So, for example, now, let's just take it for example as human being. You have to understand someone. Maybe that person is someone that gets anger easily, that gets angry easily, that gets different kind of behavior. Are you with me now? If you know the kind of person he is, you know how to approach him. Maybe he gets angry easily. You know that you have to approach him with a calm voice, in order to know what to do, a step to take. So same thing with this market structure. You should know the step to take when you understand what market is actually doing. Okay, you know what to do. Now, that is what market structure means. Are we good with that? What's market structure mean? It means the behavior, the patterns, what market is actually pointing currently. That is what it means. So such that if you go into the market and you look at your chart, you can read the market and say, this is the current structure of the market. This is the current behavior of the market. And that behavior will judge any other decision you are going to make. That's why I said, if your decision on market structure is wrong, any other thing will what? We will not even work. Okay? Now, that is the definition, or not even definition, it's just a meaning. Just on an understanding. If you are talking about definition, we'll be writing so many notes. That's why you're not seeing a lot of notes here. It's just simple explanation. Are you with me now? Now, when it comes to market structure, we have different types of basic market structure. See, yes, we have advanced, we have advanced, we have advanced. If you don't understand this basic, trust me, you are joking with advanced. So even when you get to advance, you can't abolish this basic. You can't abolish the basic. Even when you get to advanced, you can't abolish the basic. We have different types of market structure to such that if you go into the market and you look at the price action means what market is actually creating, like the blueprint market left or whatever market is actually doing. That is what we call market structure. So different types of market structure. If you look at it, we have the three things you have to see. First one is called bullish. You see this bullish, assuming you have been reading the candlestick the way I sent it, you will start understanding some terminologies because the candlestick is not just for you to go and be cramming all the candlestick. Trust me, I know a lot of candlestick, like even everything safe. If there are a lot of them in that candlestick. There's one even the three moving soldier. I even forget most of them. So I can't even remember everything because it's been long I studied them. Okay, but it's just for you to understand the psychology behind those movements. To try to understand the psychology behind the formation of that candlestick, of those candlestick. Are you with me now? Once you start understanding how buyers and sellers form that candlestick, me and explaining all these things will actually not be new to you. You start grabbing some things. For the newbies, trust me, just follow me and you will actually get it. Nothing is that hard. Okay. At first it might look somehow. That's why I'm always trying to consider it. Okay, because I know how it looks like when you are newbie. Okay. The first types of market structure is called bullish trend. Bullish. Bullish, another word, can be called uptrend. Okay, can be called uptrend. Can be called uptrend. You know, tech people, tech students, they have their own terminologies too. They have their own words. There are some things I will be saying. One guy was saying he's still studying backend. I was like, "Ah, which one is backend again?" Because I'm not that kind of tech person. So I was like, what is this one saying? Because I don't understand it. So when you are talking about bullish, when you are talking about uptrend, is the FX terms. So you should get familiar with all these terminologies. Okay. There are a lot of even these things that most people are not even teaching now. We have so many things that we learned back then. FOMO, fear of missing out, feud, like so they are spreading news so that a lot of people will get scared. So many terminologies back then that this is just things that you should know. Okay. Bullish trend means that market is going up in a simple way. And when market is going bullish or market is moving in an uptrend, market will be creating series of higher highs and higher low. I'm going to show you how it looks like, okay? You are going to look at it. When market is bullish, it will be creating series of higher high and higher lows. I didn't say it will create higher high and higher low when market is bullish. It will be creating series of higher highs and higher low. That is the first type of market structure. Secondly, we have the bearish trend. That is, when market is bearish, it's called a downtrend. That is, sellers are active. When market is bullish, buyers are active. When market is bearish, sellers are active. They are the one dominating the market at that time. So you should follow what they are doing. You should follow their footstep. Okay. So when market is bearish, market will be creating series of higher highs. Market will be creating series of lower highs and lower lows. Lower highs and lower lows. Is it this HHHL, LHLL? I will explain so that we won't be able to forget them. Okay, even if you wake me from my sleep and you say I should start teaching market structure, I will explain everything without opening any notes. Okay, even to the advanced concepts. It's just that everything has grinded in my brain. That's how it looks like. That's what it means by studying for a long time. And it's not just attending one class and everything that sticks to your head like that. It doesn't glue like that. That's not how knowledge just sticks to you. You have to study. Thirdly, we have ranging markets. You know, the first one we said bullish, that this market is going upward or uptrend. Bearish market is going downward, okay, or market is in downtrend. Ranging market simply means sideways movements with no clear trend. That is, market is not moving upward, neither going down. Market is neither going up nor going down. Are you with me now? That's what we call ranging markets with no direction. When market is bullish, your decision will be that you want to follow the buyers and start taking buys. And when market is bearish, your decision should be like you want to start taking sales. But when market is ranging with no direction, what do? You avoid it because you don't know the character. You don't know the structure of the market at that moment. You know the market is actually ranging. Do you see how simple these three things are? Just understand the psychology. If you understand what the meaning is before we go into the charts now, you see that it's actually easy. Okay? Then, so I'll just send the PDF so that you guys will go into it. So that because I took my time to draw everything, all this on share. But let me just go into the chat and draw example of what I'm talking about. You can see my screen, right? All right. Thank you. So we are going to the charts now. So I've explained the meaning of market structure, and then I said we have the first one, which is called the bullish movement. Okay, when market is bullish, market will be creating what we call uptrend, and when it's creating that uptrend, it will be creating this pattern, series of higher high, higher low, higher high, higher low. For the newbies, just follow me, and for the advanced also, try to follow. Higher high, higher low, higher high, higher low, higher high, higher low. This is an uptrend movement. Okay, now how do we label these patterns? What it means? See this edge here is the higher high. Are you with me now? This low here is the higher low. And same thing applies. This here, this here applies to this guy here. This higher high here is still the same thing as this one. This higher low here is still the same thing as this one. Higher high, higher low, higher high, higher low. See, before markets, you see this leg, this particular leg, this particular swing here that took out this higher high. When markets took out this higher high here, we have what we call break of structure. Don't worry, you get it now. Are you with me now? We have what we call break of structure, which is BOS. HL means higher low, and higher low simply means strong point or a strong zone, but I call it just a strong point. And higher high is a weak point. So higher high tends to get taken out. That is, market will take out higher high. And higher low is a strong piece that market really takes out, basically. Are you with me now? So this one like this now, from this higher high, market break it with this guy here. See this leg, we break this guy here. So we have a BOS here. We have a BOS here. We have higher low. We have higher low. We have higher low. BOS. We have higher high. Let me just type it as fully so that you guys will understand when I'm typing. Higher high. The same higher high as this one, so that it will not take our time. See, this is higher high also. This is higher high, HH. I just short it to HH. HH. Any market structure, once you start marking it, you don't need to start writing higher high. You can just write HH. Are you with me now? This is an uptrend movement. Okay? This is an uptrend movement. This is an uptrend movement. I hope you guys get that. Can we proceed? Yes. Okay. Now, looking at this part, before I start, this is just like a basic understanding because we have to see, you still have to understand some things about this movement. So even though it's basic, we are getting to the complex aspects. But let me try the mark out the downtrend movement. This is for uptrend. That's uptrend, market going up, and this is the structure it will create. When market is moving downward, market will be creating series of lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. Okay, see this is a lower high, which is a strong point. You can see when market came here, couldn't break it. Okay, this is what we call paper charts, and we're still going to prove that in the charts, real charts. Market couldn't break this guy. If we break this lower low here, and then we trace, couldn't break this guy here, break this higher high here, would not break this one here. So I will label it out so that you will see everything that I'm talking about. You can see when you take out this lower low here, we have a break of structure. You have another BOS here. You have another BOS here. This is lower high, LH. I had to label everything because of so that you guys, for the newbies, can understand very well. Just try to understand the patterns. This is lower high, and lower high is a strong point in a downtrend. Let me check the JC. Hope I'm still communicating. Those that are asking questions, you are just asking questions. Just listen. Just follow the class. Just follow what I'm saying. You're asking questions. There's still time for questions. Oh. That's why everything is created. Oh. So time that you're supposed to listen now, you're asking questions. Just listen first. It's like when you are in class or your teacher or lecturer is teaching, at least they will not say this is time for like do you have any question or anything. As first you will listen to the new thing you are learning and try to understand. BOS means break of market structure. Break of market structure. So we have this guy here as our lower low. Okay, now, so for you to understand something about this thing, there is a way I used to say it. If you want to get the weak point that market will break, it has the same alphabet. For example, now, for the downtrend, we have LL, which is the weak point. For the uptrend now, we have HH, which is the weak point. For in that same uptrend where we have higher low, HL is different alphabets. Just look at it that way, and you see that you'll be able to grab it. For the downtrend also, we have LH, which is different as alphabet. So the ones that has wherever you know that this is the same alphabet, that's the weak point. So we have lower low, we have lower low again. Let me just write it fully like that. Same thing applies to this one. Are you with me now? This is a downtrend. This is a downtrend movement. And sellers are in control. Are you with me now? This is downtrend. This is uptrend. You have to study it. That's why we have just 3 classes this week. Just just three, and even just 2 classes. The last one the third one will be what? Q&A. So you have enough time to study. So you have no excuse at all. Okay. So this is it. Now, I told you guys that we have 3 types. The third one is called ranging market. See this one, it can be called ranging market, can be called consolidation, it can be called choppy market, but that choppy one is even different a bit. This is a ranging market. Can you see? It has no direction, just going upside down without any direction. This is what we call ranging market. Ranging. But when it comes to choppy, like the choppy is more of like ranging, but that one is market is just like the this thing is too choppy. Like it's even worse than the ranging market, but still the same thing. The market is too choppy. This is how it should look like. You don't even understand the direction at all. And in that situation, it is expected that you avoid it. I hope we are good. So now let me just do a quick recap, and then I'll just try to explain some labeling, like the basic structure. We have the complex things about it that I have to explain quickly. And all you have to do after this class is go through the recorded version, try to digest it. Not just one times, 2 times. That's why I'm trying my best so that the videos won't be so long. You can watch it 2 times for the next class. So you would have written out all your questions if you have any question. And if you don't have any question, you are good. You are good. So by weekend, we look at the Q&A if you have anybody have question. Now, I will repeat again. When market is bullish, market will be creating series of higher high, higher low, going up, going down, going up, going down. Because you don't expect market because market is bullish. My buyers are in market. Market should just be going up, going up, going up, going up. It doesn't work like that too. Market will not just go in a straight way. It will have some pullback, which I'm going to explain. So market will be having some pullback, higher high, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And this is how uptrend movement is created. And we have our break of structure here. Same thing for downtrend. We have our lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Are you with me now? And that is how downtrend is created. Now, lastly, let's look at a few things about this market structure. You can see that it is only one thing that comprises. I said when I defined uptrend and downtrend, I said series. It means before it becomes series, it is one. Okay, so until it becomes series, that's when we consider it a good market structure. Okay, now just a single market structure. This is how it looks like. Are you with me now? It's like this guy here, just single one like this. Why this? Okay, just single one like this. That's a single structure. So when we have series, we'll be having one, we're having two, three, four. Are you with me now? So we have like four legs here. This is four leg. That's why you can see that I mark out four strong points. Are you with me now? So now, how do we understand this level, this all this body structure? Now, when market is actually bullish, as you can see, market was buying, sellers were active, and the market sold for a little while. You can see that it sold. This selling simply means what? Retracement. When market retrace or pull back, market just pull back for a short period of time and then it continues the trend. See, when market continue the trend, this particular one is called what? It's called this is called retracement. This is called retracement. And this one here, this particular leg here that leads to this break of structure that takes out this higher high is called swing structure. Or you can call it a swing leg. Are you with me now? So this part of the body of this structure applies to every other thing here, every other structure that is created. You can see we have four legs that were created, and the same thing applies to this downtrend. Let me just this one here too. Market is bearish. For the downtrend, where will be the retracement? This is the retracement because market was buying for a short time and then it sold off. Market bought for a short time and then sold off. So this is the retracement. That's the retracement. This is the swing leg or swing structure. Do you guys get that? Now, lastly, before we go into the market, we can consider this guy that we go on our. If you have studied the candlestick, you will understand what we call time frame. Time frame simply means the time it takes one candlestick to form. Okay, the time it takes one candlestick to form, and that time frame, once it applies to candlestick, that's what builds up the market structure. Okay, let's proceed. Let's assume this structure like this. This is a downtrend. We spot it on 1 hour. You can see on my down left corner here, you can see XAUSD. You can see 1H. So I can click on this 1H. You can see 1H means 1 hour. You can see different time frames there. We have daily, weekly. So if I'm 1 hour, look at it. If we are on 1 hour, it means each candlestick you are seeing on this chart, it takes them 1 hour to get created. As you can see, this current candlestick, this is the current one we have right now. It will take it 1 hour before it closes. You can see currently in Nigeria we are at 1:05 p.m. And if you can look at my right hand side here, where the price of XAU is listed, you see that we still have about 54 minutes before this candlestick will close. Which means it will take this candlestick 1 hour to close. That is what time frame means. This particular candlestick here, this one here, it takes it 1 hour before it's formed. Every candlestick you see here, it takes them 1 hour. So each time frame you go to, it takes each candlestick to form that same time frame. So if I go to 1 minute now, 1 minute time frame, this particular candlestick currently forming now, this particular one, it means it takes it 1 minute. So look at the time, we have 009. See, once this time ends, 006, you see that another candlestick will start creating. Let's look at it. 02, 01, another one starts. You can see another candlestick has started. That is what candlesticks. Fast. For those that didn't understand candlestick, time frame. That's how it is. So if you say anyone that starts asking time frame again, believe me, they haven't even gone through this recorded version. Because there's no way I will type it. Like I will go to the Telegram, I will type it. That you will understand it unless you go to where I have explained it. I have done the practical aspects. Okay, so let's go back to our time frame 1 hour. Now we are on 1 hour, which means this chart is created on 1 hour. Okay, all these chart movements are all 1 hour candlestick, which means that each candlestick, if we are to go to, let's say this one candlestick now, this is a single candlestick. If we go to lower time frame, this 1 hour candlestick, if we go to 5 minutes time frame, it will have how many 5 minutes candlestick? 5 minutes time frame candlestick. Let me repeat myself. This is a 1 hour candlestick. That is, it takes it 1 hour to form. If we now go to lower time frame of 5 minutes, how many 5 minutes time frame candlestick are we going to see inside this 1 hour hole? Because this is just one, but if you go to 5 minutes, you see a lot of them. Good, good. It's 12. Because by the time you start counting, it's 5, 10, 15, 20 to 60. It's actually 12 candlestick. Okay, that's how simple it is. So just follow me and you will get this thing right. Okay, we are not rushing. Again, that is that. So I have to explain that before I start explaining some things. Now, I'll first use this guy. I said this one is just one structure that was formed, and we can have series of it. And having series of it is what form a trend. Okay. Now, this retracement, we can consider this structure that I mark, that this is a chart for 1 hour time frame. Now, on lower time frame, we actually, this retracement here, it won't be just one candlestick. On lower time frame, we're having series of structure too. Like on lower time frame, this retracement will be creating short-term sales. Are you with me now? Can you see inside this retracement here, we have short-term sales. So even when we have just short-term sales, we are creating little break of market structure, little structures. And this little small structure that's being created is called minor structure. Don't get it right. This pullback movement is called retracement, or you can call it pullback. But inside this small pullback in an uptrend, the structures that you are going to find in it in lower time frame are called minor structures. This is the bigger picture of the is if you understand what we call micro and macro, like macro view and the micro aspect. This is like macro now, the bigger structure. This one here. And this little one are the micro one, little ones that you can find inside it. As it applies to this retracement, it applies to this swing structure too. You'll be seeing little ones on it, little structure on lower time frame. And this little structure that you find inside this swing on, they are called substructures. I will repeat that, and I think that will be it. And I will just show us an example on the chat. See, trust me, the way I try to break this thing down, you have to understand it one way or the other. Substructure, minor structure. Are you with me now? So the macro view, you call it swing structure, and when it comes to the micro level, when you are looking at it on lower time frame, it will be forming substructures. So on lower time frame, it's creating its own structure too. Even if you go to 30 seconds, you'll still be seeing market structure. Market will still be creating highs and higher low, one way or the other, even if it's not making sense. But one way, market will be creating brick or structure. So they are called substructures. Depends on the time frame you are using. So that is what we call time frame inside time frame, candlestick inside candlestick. Same thing applies to this guy. You just see that we have short-term retracement, short-term buy. It goes like that. and then market continues the trend. These little ones that we call substructures, little ones, they are the one that actually follows the trend of this particular trend. These minor structures, they didn't follow the trend. It's just a short-term buy. So most people, when they want to buy now, what they are going to follow, you go to lower time frame, you don't look at the bigger picture. You're now looking at the lower time frame because lower time frame is sweet. The market is now giving to you a minor structure, and you think it's the structure of the market. Meanwhile, it's just a short-term retracement. By the time markets will move on you, the movement will be massive. Okay, that is why you have to understand your structure from the macro level to the micro. I don't even think no one has even explained it to me, telling me it's from micro view or macro view. I'm just trying every possible way you guys can understand it. Okay, that is how these structures. That's the complex aspect of it. This basic market structure. Okay, so now we are on 1 hour now. If we are to mark, let's just use this guy as an example. If we are to mark structure of this guy now, let's just look at it that market start from here. Okay, we have this first one here. We have a brick of structure here. We have another brick of structure here. We have another brick of structure here. Okay, so this is next class. That's when I'm going to talk about change of character, because that happened here, but I'm not explaining it today. So next class will be change of character. Now we have three structure built here. Okay, three structure. So you'll be wondering, why didn't I choose this little one here? We have about two one, small one here, 1, 2. Why didn't I choose this one? Because looking at a good market structure, it must create a good V shape or a shape for me. Look at it. This is a good V shape. Very good one and obvious one. Not these little ones. Not these ones. This one I don't consider them a good structure. They are just substructures. Okay. Now let's look at this guy as our higher high. Higher low. Okay. We have our BOS. Okay. We have our BOS again. And this is an uptrend movement. We have a higher high, higher low here. We have another higher low there again. We have this higher low here. The low of each structure. Because this particular low here, the one I mark here, it must have its own structure. And I think it's this one here, this one here. Can you see how I'm spotting it easily now? Because after tonight's class, it's an assignment to you to go and pick a pair of your choice. Many people would have said gold is difficult, gold is blah, blah, blah. But it's actually the easiest one coming. Okay, so just take your time. You can use gold. Gold is actually the ones. Even most students, thousands of them that I have taught, I always tell them to go to gold and analyze it. So don't be scared of gold. Once you are here, you will trade gold one way or the other, not just any other. You will trade gold is mandatory self. You trade it and you master it. So we have this one too here. You can actually see it with my full chest. Gold has the best market price action. That's the best price action. Trust me. It has the best price action. Because when gold is bullish, you actually notice that this guy is bullish. Because just look at this movement. Look at it now. Look at it. Look at it. until yeah, it try to change its direction here, and then it continues movement again. Can you see that? You can try any other page too. We have AUD there. We have NZD USD. We have AUD JPY. Any other pairs of your choice. We have what's the name of this? We have other metals too. You can try silver too, because you can try crude oil. I analyze crude oil. I use oil. Okay, US oil. You can try it too. So we have this iron low here. Okay. That is that. Now, I have identified the basic ones I thought first. Okay. So now we know that this is a retracement here. Like market was actually selling. But when we get to change for that, I will explain some things here, but not now. So we have a break of structure here. Market retrace. You can see the retracement, sell for a short term, and then have a swing structure and break structure. This is a swing structure that led to this BOS. And we know this is our HH, higher high. This is our higher low. Then after market break this structure, we have is retracement again, market break structure. Now, one thing you have to know before I forget is that when market break structure, you must consider it should be weak to body, not body to weak. That's why you have to understand the candlestick, understand what we mean by weak and a body. Now, this is the body break. That is, it is the body of the candle that broke it, not weak. You can see body of the candle is the body of the candle that takes out this weak. So it is weak to body of the candle, not weak to weak like this. Assuming it is a weak that break this guy here, we have not had a proper break here. It's just a fake break of structure, FBOS. Look at this one too. From weak to body of the candle. It is this body of candle that broke it here. Are you with me now? Let me find let's say for example, let's just use this one. Let's say this is where we are expecting the break of structure. And then this week now happened. See, this is a fake brick of structure, not a good brick of structure at all. This is a fake brick. If good brick of structure must break it with the body, but is a weak to body, not weak to weak. Hope you get that. Good. Now, this is 1 hour. Let's go to lower time frame if we can identify the substructures and the likes. Let's go to like 15 minutes time frame. Now, you can clearly see that with this guy, this is a retracement. We can see these minor structures there. You can see the little break of structure. You can see them. And with the swing, this is the swing here, buying again. You can see the substructures. You can see the substructure. Now look at this guy now, this substructure. Now see the way I bypass the. Come and see what I'm saying. Can you see? The first break here this week was a fake. Even this one here was a fake. Until market now broke it with this guy here. This is the candlestick that led to the break. All these ones are fake break of structure. And then we have another BOS here again. Sub break of structure. And that's how it's created. Can you see on lower time frame? So if you go to 1 hour time frame, it won't even be obvious. Can you see? Can you see how it looks like? Same thing applies to these guys. It applies to these guys. If you have to look at it from downtrend view, can invert scale. Can you see? This will be lower low. I mean lower high, because it's a strong point. This will be lower low. This will be lower low. And this still remain a break of structure, break of structure, break of structure. This is a lower low. Okay, and these are the lower low. All these ones are lower high. This is a lower low. lower low. Where the break of structure happened, where market took it out, they are the lower lows. I've explained it using paper charts. This is a lower low here. This guy too is a lower low here. This angle here is a lower low. I hope you guys get that. And that is what we call basic market structure. It might take time, but I make sure I identify each of these things out. You have to watch the videos like 1 or 2 times. Then my assignment for you is to go into the chat. When comes to assignments, it's for your own good. Okay. Okay, it's for your own good. It's for you to practice. It's for you to practice. Go into the chat and paste your market, what you drew out as your market structure. Okay, what you drew out as your market structure. And you can start sending the charts like starting tomorrow, not today. Once we end market structure tonight. Okay, I hope you guys get that, and I believe how to identify correct break of structure. I've said this now, is weak to body. So that will be it on market structure. So I'll meet you guys tonight again. Um I'll meet internal will be explained in advance. So anything that you see me saying here now, I didn't mention anything internal. So anything that has to do with the basic, I'm saying it now. So the newbies, trust me, follow this process. When you get to advance, you don't even get confused at all. This same thing you can prove me wrong. Even if you try to test YouTube, the next 20 minutes, by the time they use a lot of English for the next 20 minutes without even explaining what you want self, you will see that it's actually different. Because I've gone through YouTube before. I've seen a lot of things, and even all these things I'm explaining right now, they are knowledge that I got around 2021, 2022. And like I said, if you have any question, my Telegram is filled up. You can try me on WhatsApp. Trust me, I will try my best to reply. My Telegram, no, 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 no. So see you guys tonight again. Bye bye, everyone, and take care. My WhatsApp number is same thing as my Telegram. So bye.